Assalamualaikum warahmatullahi wabarakatuh. My name is AQIF AIMAN and I'm from AC50. So today, my group will present about the accounting fraud in the Serba Dinamik case. This presentation will be presented by me, AQIF AIMAN, FARAH NATASHA, SYAQIR and Zainal. So, we go for the first part, which is what is accounting fraud. Accounting fraud is the purposefully hiding of a company's actual financial condition. Is an ideal environment for accounting fraud. It takes the form of fraudulent accounting record manipulation, a criminal practice intended to provide an inaccurate financial picture of a corporation. This well-planned lie aims to tie parties, including creditors, investors, and the general public, into a web of false information. Accounting fraud is fundamentally the illegal modification of financial statements. This kind of fraud is frequently done to exaggerate of a business profitability or financial stability, driven by greed or the pressure to meet the fictitious earning expectations. The offenders commit several crimes. This frequently comprise the fabrication of fictitious revenue. Is a horrific practice that enters the recording of sales that never happened, grossly misrepresenting the actual revenue creation of a business. As an alternative, offenders can increase the value of actual sales, which would intensify the fraud. The next part is the artful concealment of expenditures. The plan also depends on a corporation purposefully understating or even leaving out all of its expenditure. Fraud can take many different forms, such as purposefully underestimating the real cost of an expense or completely failing to register it. Next is a skillful fraud regarding assets and liabilities. The offender could also fake information regarding the asset and the liabilities of the business. The misuse of assets, which is a more overt type of financial wrongdoing, may also be covered by the accounting fraud. In this situation, firms' funds are progressively reduced when cash, merchandise, or other assets are covertly taken for a private benefit. So, the next part is I will explain and relate about the following term to the Serba Dinamik case. For the first one is tone at the top. Tone at the top refers to overall ethical climate created by an organization's leadership. It reflects the leadership's commitment to ethical behavior and its expectations for employees. A strong tone at the top emphasizes integrity, transparency, and accountability. The Malaysian business Serba Dinamik was charged with financial manipulation in the Serba Dinamik case. There have been allegations that these manipulations may have happened in the absence of a firm tone at the top. This is how the case and tone at the top may be related. If the leadership put money above moral behavior, it may have fostered a culture where workers felt under pressure to act unethically. The claimed manipulation may have persisted due to lack of control of a culture disobeying warning signs from the management. Moral accounting practice would have been brought to the light and manipulation would have been avoided with a strong leadership position. The next term is asymmetric information. In the context of the Serba Dinamik case, asymmetric information could be relevant in a couple of ways. For the first one is in the investors vs the management. A case of asymmetric information may exist if Serba Dinamik's management has access to significant confidential information of the real financial health of the firm. Investors would be making judgment based on an incomplete picture if they were only looking at the company's financial statements. This may provide management with an unfair edge which might mislead the investors. The next one is Serba Dinamik vs the auditors. It may be an instance of asymmetric information if the auditors responsible for examining Serba Dinamik's financial statements did not have full access to the data or were unable to spot possible manipulation. Due to this, the auditor would be less able to accurately evaluate the financial health of the organization. This connects to the Serba Dinamik case in the following ways, which is according to the accusations. Serba Dinamik might have falsified its financial reports. If verified, this would represent a situation where management is more informed than investors about the real financial state of the company. The third term is the role and responsibility of the board of directors. In the context of the Serba Dinamik case, where financial manipulation was alleged, let's see how the board of directors' role and responsibilities according to agency theory might be relevant. The first one is keeping an eye on management. One of the board's most important duties is to keep an eye of the management's performance to make sure they are operating in the company's and its shareholders' best interests. This concludes checking the financial accounts, managing internal controls, and responding to any concerns brought up by the staff members or auditors. It was allegedly believed that the board may have overlooked indications of possible manipulation if they were not keeping a close eye on the management. The second one is financial reporting. The veracity of the company's financial statements ultimately rests with the board. They depend on management to supply the correct information, but they must also guarantee adequate supervision and resolve any inconsistencies. If the financial statements in the Serba Dinamik case were altered, the board may not have been complied with its financial reporting obligations. The fourth term is human biasness and personal interest. How to relate this term to the Serba Dinamik case? If the management falsified the financial statements, this could indicate an overconfidence bias or a motivation to conceal unfavorable information. If individuals examining the financials fail to notice the warning signs, confirmation bias may have been at play. If close connection between board members and management affected supervision, in-group bias might have a role. If personal interest ignored by the board members' duty to the shareholders, then the compensation structure of the management or their personal relationship may have an impact on their decisions. It is imperative to bear in mind that these are their conjectures and the inquiry is still under progress. The precise cause of any such misbehavior are still unknown, but applying the agency theory to the human bias and self-interest allows us to see how these elements might play a role in circumstances such as the one in which Serba Dinamik case. And for the last term, which is fiduciary duty of the board of director. In the Serba Dinamik case, the fiduciary duty of the board of directors becomes highly relevant due to the allegations of financial irregularities and governance issues. Here's how this duty relates to the case. The first one is loyalty. Directors were obligated to act in the best interest of the firm and its investors. This entails steering clear of conflicts of interest and giving the company's long-term interests top priority when making choice. In the Serba Dinamik case, board members would have violated their fiduciary duty of loyalty if it were discovered that they had put their own interests or the interests of certain people ahead of the company's. The second one is through care. In carrying out their duty of care, board members must supervise the company's operations with a fair amount of caution and thoroughness. This entails keeping a close eye on the business internal controls, financial performance, and regulatory compliance. The board may be held accountable for violating their duties if they neglected to identify or to take action about the warning signs of financial irregularities of Serba Dinamik. That's all from me. Thank you.
Bismillahirrahmanirrahim. My name is Muhammad SYAQIR bin PUARSUHA. So I will be continue the presentation about fraud that happened in the company or case, which is for us we choose the Serba Dinamik Berhad. Serba Dinamik Berhad directors and executive were accused of violating the Capital Markets and Services Act 2007 under section 369 subsection A subsection B. It all started from May 2021, where KPMG auditors for Serba Dinamik highlighted concerns regarding the transaction. There are 11 parties participating in all, with sales transaction valued at 2,000 million, trade debt totaling 650 million, project materials valued at almost 570 million, and a total transaction value of 3 billion. According to the KPMG, determining the validity of contracts and transactions involving funds and costs is impossible. To make sure the transaction was authentic, KPMG questioned 12 Serba Dinamik clients and they only received one response. Because of this, Serba Dinamik suggests making an interview session between KPMG and the trade debtor for further clarification. In addition to the two providers that registered on the same day, 4 suppliers have the same registration address. There is only one owner of each of these providers. Serba Dinamik clarified that the address was that of the company secretary in response to the question about the same address. Lastly, Dato' Abdul Karim, CEO of Serba Dinamik, want KPMG to take responsibility because of the delay in audit process. The Security Commission of Malaysia then launched an inquiry into Serba Dinamik regarding the 6.01 billion ringgit Malaysia in revenue that was stated in its consolidated results for the quarter and year that ended on December 31st, 2020. Serba Dinamik was found to have made a false representation. Next, about who is the whistleblower in this case. For the first point, it is internal suspect. It is first brought up concern to KPMG, the company's external auditor, in May 2021 regarding financial irregularities within the organisation. After that, KPMG investigated the matter and found multiple inconsistencies in Serba Dinamik Berhad financial record. Following the disclosure of this result, the Security Commission Malaysia opened a formal inquiry. KPMG deserve a praise because of its professional skepticism. Because of this, they start to be more suspicious when Serba Dinamik want to sue KPMG, claiming that KPMG carelessly failed to find the addresses of its suppliers in Bahrain. It is also become because of the Serba Dinamik action, it can be seen that Serba Dinamik did not want to give cooperation regarding the transaction during the investigation phase.
Moving on to the next question, which is consequences, effects and penalties imposed to the related parties to the case. Okay, for the first will be the auditors. The auditors involved in this case are KPMG and Ernst & Young, EY. In the reaction to this scandal, the lawsuit was filed by Serba Dinamik to KPMG because Serba Dinamik claims that KPMG commits carelessness and make a violation of Serba Dinamik legal and contractual obligation. And as for EY, lawsuit is filed by Serba Dinamik against them in attempting to void the engagement letter and EY's appointment. Serba Dinamik also claims that EY deceives the company into believing it met the requirements to be named as special independent reviewer. And they also claim that EY is not registered as auditor in the Audit Oversight Board. As for the company, which is Serba Dinamik, Securities Commission (SC) pressed charges to Serba Dinamik due to their found the company is culpable for misconduct or failure to comply with the regulatory obligation, which is they falsely presenting their financial statements. And due to that, Serba Dinamik lost the trust and credibility of the investor, client and business partners due to the accusation mentioned earlier, and that leads to the company's stock price drop, which can reduce shareholder value. Serba Dinamik also filed a lawsuit against Bursa Malaysia in claims of excessive exercise, and they also filed a lawsuit against KPMG and EY as discussed in auditors part earlier. As for the board of directors, it is discovered that the board member have broken the rules and the governance guidelines. And due to that, regulatory bodies such as Bursa Malaysia imposing fines to the board due to breach of their duties, and Security Commission pressing charges due to falsely presenting the information in their financial statement. From this scandal, directors may suffer in bad reputation, and this can affect their future eligibility to serve on other boards. As for shareholders, results from this case, unfavorable market reactions such as drop in company stock price may happen, and it can cause the value of investors' investment to diminish, and the shareholders may suffer losses. As for the other relevant parties that are involved in this case, there are few. As for Bursa Malaysia, they suspending Serba Dinamik from public market due to their obligation to uphold market integrity and protect investors' interests by closely monitoring trading activities related to Serba Dinamik stock and investigating any unusual market movements. Due to that, Serba Dinamik is suing Bursa Malaysia for exercising above of their power. Furthermore, Bursa Malaysia fined 10 Serba Dinamik's directors due to breach of their duties. As for Securities Commission, SC, they conduct their own investigation on this case. The wrongdoing is found and SC imposed fines towards Serba Dinamik, its directors and its officers due to presenting false information in their financial statements, which violates the securities law and regulation. As for the supplier, they may face financial losses if Serba Dinamik operation is disrupted due to this case, and this is because delayed payment or contract cancellation. As for the customers, they may experience disruption in service or project as they're relying on Serba Dinamik services, and due to this case, Serba Dinamik's operation is also affected. And this can lead to drawback from existing customer and also potential customer that relying on Serba Dinamik services. As for employees and officers, they've been imposed charges by SC Security Commission due to falsely presenting information in financial statements. Other than that, employees of Serba Dinamik may face uncertainties regarding their job and future prospects if the company financial situation deteriorated due to the case.
Assalamualaikum, my name is Zainal Ariff, and today I will be present about my opinion on the pressures, opportunities and rationalization of those perpetrating the fraud. The first one is pressure. Financial pressure, where individuals may face personal financial difficulties or desire for wealth, leading them to engage in fraudulent activities to alleviate financial strain or attain material gains. For example, in the case of Serba Dinamik Berhad, supervisors facing declining share prices may feel financial pressure to engage in fraudulent activities to protect their personal wealth and business interests. Next, professional pressure, where high expectations or performance targets within the organization may push individuals to resort to fraud to meet unrealistic goals or maintain their position. For example, the high expectations set by Serba Dinamik Berhad management or shareholders for maintaining profitability may pressure employees to resort to fraudulent reporting to meet unrealistic goals. The last one is social pressure. Peer pressure or the desire to maintain a certain lifestyle or status within social circles can motivate individuals to commit fraud to keep up appearance. As for opportunities, the first one is weak internal controls, where lack of proper oversight or control mechanisms within the organizations creates opportunities for individuals to exploit loopholes or manipulate process for personal gains. For example, the lack of proper oversight at Serba Dinamik Berhad allows supervisors to exploit loophole in procurement process, as evidenced by the suspicious registration of multiple suppliers on the same day. The second one is complex transaction. The complexity or volume of transaction within the company can make it easier for fraudulent activities to go unnoticed amidst the vast amount of data. The third one is inadequate segregation of duties, where roles and responsibility within the organization may not be clearly defined or separated, allowing individuals to manipulate process without detection. As for rationalization, the first one is justification of action. Perpetrators of fraud often rationalize their behavior by convincing themselves that their actions are necessary or justified under circumstances, such as believing they are entitled to the funds of that their action will benefit the company in the long run. For example, Serba Dinamik Berhad may rationalize their fraudulent behavior by convincing themselves that providing inaccurate information to Bursa Malaysia is necessary to protect the company reputation and financial stability. The second one is minimization of consequence, where individuals may downplay the potential consequence of their actions, convincing themselves that the harm caused by the fraud is insignificant compared to the perceived benefit they stand to gain. The third one is blaming external factors. Perpetrators may shift blame onto external factors or circumstances beyond their control, such as economic downturns or pressure from superiors to justify their fraudulent behavior.
So next is about the wisdom. The first is about scout mindset. It is very crucial for both auditor and auditee to implement the scout mindset during the auditing process and not hold onto the soldier mindset. As can be referred to the case, auditee stands on their soldier mindset and tends to blame other parties to cover up their fault. All of this lead to provide asymmetrical information to maintain a company's reputation is not ideal, as it will mislead those who rely on the financial statement to do decision making. However, they try to cover up their wrongdoings. The truth will always be revealed. That's all from me. Thank you.
In conclusion, the Serba Dinamik case underscored the crucial role of auditors in ensuring financial transparency. Allegation of negligence lead to legal action and internal turmoil, including the resignation of a director and a decline in share price. It highlights the delicate balance needed between auditor independence and professional duties. This case emphasizes the importance of oversight mechanisms and ethical standards to maintain confidence in financial markets.